Bill Baruch of Blue Line Capital and Alex Kantrowitz of Big Technology. They're both, as you know, CNBC contributors. Bill Baruch, you first. Most important for you as the shareholder here, money on the line is what?
Yeah, I think coming through with that revenue growth is obviously going to be important. That 17%, you want to see some margin improvement. But I also think it'd be interesting to hear what they have to say about AI, helping to trim the content budget 5 to 10%, improve customer personalization. I think that's all very important in deepening the customer engagement. I think that's going to show up and really help the stock kind of respond to this nice technical floor that it's building out. So that's what I'm looking to most.
Yeah, Alex, this new wrinkle that Julia referenced that we've been talking about throughout this day, this potential of a Warner Brothers tie-up. Should they do it?
I went through all the possibilities here about why Netflix shouldn't do it. It's very profitable. It's leading in a number of categories. It's the one streamer that stands out. And I still couldn't quite get to the point where I would say don't go for it. I'm a believer in going for the win. If Netflix was to acquire Warner Brothers Discovery, that would be going for the win. The thing that it will risk if it doesn't make this deal is someone else deciding that they want to roll up WBD and then basically having a competing streaming service. If Netflix does this and it gets through regulatory hurdles, then Netflix basically becomes the streamer, nobody else. And so I think for that reason, it's worth doing.
All right, you go for the gold when you have an opportunity to get it. Bill Baruch, why has the stock been stagnant for the last several months? If we back out the chart here, what was a great run has gone sideways.
It's retested that level in May, middle of May, when it accelerated higher. I think it got a little ahead of itself. And this revenue ramp, if it can continue to show this trend where each quarter is improving that revenue growth, I think we'll see some good follow through. I don't think there's a reason why it can't get back above 1,300. So I expect a good report to give us at least a 5% move back to those highs by the end of the week. And I think that's what we're really looking to see, and just how they deliver these earnings. And again, AI utilization. How is that going to come into and help those margins? That content is there. It's being delivered. So I think that the guidance is supposed to be good, is expected to be good, and that could be something that could really help be a tailwind. However, all that content coming out could weigh on some of the margin guidance in the fourth quarter.
All right, from Netflix to Alphabet, those shares are falling today. OpenAI announcing a new browser. It is big news. It's had an impact on the stock today. Mackenzie Sagalis is following that story and joins us now with more. Mac.
So, Scott, OpenAI has launched ChatGPT Atlas. It is a new web browser that puts AI front and center. Instead of toggling between tabs and a chatbot, Atlas actually brings ChatGPT directly into the browsing experience. There's personalized browser memories, and you can highlight text to get summaries, ask follow-up questions, and get help with tasks like booking a trip, shopping, or even drafting smarter replies in your inbox. And there's also deeper automation for paid users. In agent mode, ChatGPT can actually click around the web for you, opening tabs, filling out forms, and taking action on your behalf. Now, for users, that means less switching. You're browsing and chatting, but crucially, doing it all in one place. And overall, for OpenAI, it's a direct shot at Google. If people prefer Atlas to Chrome, that threatens Google's dominance in both browsers and search and removes a key reason to keep going back to Google at all. Although I will say this, Scott, that Alphabet shares, they're paring their losses. That might be because it's a limited rollout at this stage, only on Mac OS, not mobile or PCs just yet.
Yeah, knee-jerk reaction, then a little reality sets in. Mackenzie, thank you. Mackenzie Sagalis, back to the guys. Bill Baruch, your take.
I think I'm not surprised to see this really bounce back. I think it was a little bit of a knee-jerk reaction. We don't know enough yet, but AI-assisted search has proven to be a tailwind for Google's profitability rather than a headwind. And I think we don't know enough about this rollout yet to really say it's going to hinder or really hurt Google's Alphabet's profitability. So I think it's just news for right now. I mean, really, at the end of the day, Alphabet has continued to muscle through every headwind we've seen this year and has had a terrific year. And I expect the stock to finish strong. I expect all these Mag 7 stocks to really be leaders in the fourth quarter. So I think all of this AI tailwind, all of this AI news, I think is really going to be a tailwind for all of these names.